Our business model is we have 3 pillars. This is the 3 steps that you need to be implementing in your business. The first one is to make money. So because if you're not making money, there isn't much you can do and the business wouldn't be exist. So the first thing is to make money. The second step is to learn how to keep the money. Business owners, they start this business with the idea of the financial freedom of creating this freedom for themselves, for their family. And then obviously some kind of probably the mission that they want to impact, sell the products, help someone. But then the next step is, okay, so they're figuring all of this out, they start making the money. But then the second step is how to keep this money. And there's different ways. One of them is the biggest expense. The biggest expense for everyone is the taxes. Unfortunately, and there's, by the way, the statistics from Forbes that we pay 25 to 35% individual pays, business owners, individuals paying taxes throughout the whole life. Unfortunately, we pay taxes on absolutely everything. We don't even see because a lot of the taxes, they all just factor into the cost on the food, water, air, travel, utility, everything. I mean, we probably like most common we know is just when we have to file the income tax because that's something we have to actually physically take the money out of the bank account, write the checks, or charge the card to pay for it, but we do actually pay lots of taxes. And if you, that's another interesting fact, if you convert this into the amount of years that it basically takes 18 years of individual life to work just to pay the taxes. Isn't that crazy? That's literally insane. So I don't think anyone wants to do that. And and that's what we here help implementing all the strategies. And the second is how do you actually spend the money. A lot of business owners, because not understanding, knowing the numbers, they just write the checks. Sometimes they don't balance the books and then the checks just bounce. There's no money on the bank accounts. They don't have money to pay employees, to pay the taxes, to pay the bills. Some might be doing very well with that part, but then they go and then they commingle the funds with the business and personal, and then they start overspending on the personal account. You buy the house and then you start the renovations, improvements, or you want to pay off the house, or you want to buy the car. And just not by knowing the numbers, this is how you lose all this money and the cash flow. And then if you cannot keep the money, then the third step to this whole process is to multiply. But you cannot multiply the money if you don't have the money. So that's why first you make the money, second you learn how to keep the money, and the third is you multiply the money. You learn how to multiply them. And also actually, talking about keeping the money, those that have the houses, once you buy the house, you take the mortgage, and then this becomes your primary focus and goal to pay off the mortgage. And there's just simple tweaks in your business just to understand, do you even need to prepay your mortgage? Like, for example, we had one client that we were working with, actually, he, besides the mortgage, all the other bills, outstanding bills, outstanding debts, there was also an IRS debt. And then we actually, when we understood and we looked at the whole financial situation, and then I saw that he's prepaying his mortgage, but then on the other hand, he has this whole outstanding debt with the credit cards and with the IRS. That financially, that was not a good decision. Why? Because the mortgage, the interest rate, you might be paying 2%, 3%, 5%, like very low. Actually, in his case, he wasn't even paying interest anymore because he purchased his house like 20 years ago, and he was already very close already to paying it off, and he was only paying off the principal. But then on the other hand, the credit card debt is like over 20%, and then the IRS debt with the penalties plus the interest. So financially, just this small tweaks in the financial decisions makes a huge benefits in terms of how you spend money and in terms of how you can keep more of your money.